Good afternoon and welcome to Markets Today. I'm your host, Mbithe Muema. It's the 26th of September, Thursday, one last day before we get to the end of the week. Again, it's been a very slow day in the market. That's looking at the Nairobi Securities Exchange. Yesterday, we charged slightly above 1 billion with regards to turnover. Today, we have nothing much to report, but we do have other exciting news set up for you. We will be giving you an overview of what is happening with the Parliament, Finance Bill, what is outstanding there, and the Banking Amendment Bill. The MPs have strongly come out and said we will not repeal this. It looks like now that conversation has come to the tail end for this fiscal year. We'll be giving you an overview of that sentiment from Parliament, what are investors thinking, and more importantly, for you as an investor in the banking stocks, what should your considerations be, and is it something new or was it something that was expected? Over and above that, today we're taking a different perspective when we're looking at the NSE and investing in Kenya in general. Rather than looking at the investment case for the companies, we are looking at somebody who's been an investor in the telecom industry for about 18 years. And this is Madam Esther Mushemi. She is the CEO of Chit Group. She has been running Chit Group for about 18 years. Chit Group has underlying businesses that she will explain to us. But we thought should be very informative and insightful to our show this day to help us understand why did she decide to make this investment decision? How did she allocate capital? What have been her returns at a personal level, at a business level? And frankly, being an investor in Kenya for about 18 years, it takes some strong willpower over and above other fundamental things that we hope to bring out in this conversation. Now, before we go back to that, let's come back again to the NSC. What is happening there? Overnight, parliamentarians have come out and strongly said they have refuted any proposal to review or actually repeal the rate cap conversation. Now recall, there was a banking amendment and a proposal through the finance bill for this particular fiscal year to actually repeal in totality this rate cap conversation that has been ongoing. What the MPs were saying is they're not ready for a situation where credit goes over and above 13%, which is where it's legally priced. That being 4% points above the Central Bank of Kenya benchmark rate, which is 9%. On the other hand, the bankers through the Kenya Bankers Association and as well as Treasury were saying that the capital owners in this economy need to be able to optimally price risk, and they did feel that 13% was sufficient to be able to cover the risk associated with non-performing loans, as well as being able to get loan recoveries if they extend loans and businesses do not work. It looks like the parliamentarians have been able to win this discussion. Now, for you on the NSC, it's not a new conversation. It was expected. I was on the other extreme. I thought there would be a slight adjustment, and I thought that the Kenya Bankers Association, the influence from Treasury and the executive could potentially win this round. But it looks like the parliamentarians were actually over and above in terms of what their thinking was. So nothing has happened. So I didn't expect this, but the market did expect that nothing would happen. And already the pricing of the banking stocks on the NSC was reflective of an environment where whatever happens, the banks have already found a new normal. They're operating, they're very efficient in terms of how they're operating. They're using the platform, the mobile platform, as a means for actually getting in touch with their clients. They're lending, and now they're actually starting to mobilize savings as well. In other words, the banking sector is trading at a 23% discount to its book value today on the NSC. Nothing is expected to change there. The only thing that we have seen a bit of a differential on is actually on KCB. We've always been saying KCB is a good stock. It has a very good management team. It has a good background with regards to its operations in the country. And most importantly, we do say that it has about 8% dividend yield. As always, you're always chasing for a return. So we've always been saying KCB is a good opportunity to look at. Equity Bank is also good, and Cooperative Bank also started becoming interesting. However, this week we have seen foreigners picking up little bits of stock on KCB. Today we've seen about 2.8 million shares traded on this particular name. It's actually touched a high of 42. We haven't seen 42. We've been trading at 40. We'd go down to about 38, 37. So 42 is a new high in the medium term. The question is there anything happening there? Recall, the last trigger point for this particular bank was the finalization of its acquisition of National Bank of Kenya. At that point in time, we expected a correction of about 5% downwards to reflect the dilution of NBK, and a similar dilution to reflect the interim dividend that it had paid out. The fact that it's actually at 42 and there's still demand at 42 begs the question, is there something that is happening at this particular particular stock that we are not privy to. That said, it is trading at 1 times book value, meaning that the price to book value, the price that is trading at about 42, 41 shillings compared to the asset value that it has on its books, and that's the shareholder equity divided by the total number of shares, are on a 1-to-1 ratio. That said, it does look cheap. Anything below 1.2 still looks cheap. So at 42 shillings, maybe it could be justified, but we're very curious just to see if there are any other trigger points. We are yet to hear of any, but it's something that you need to keep in your radar. That said, we want to look at today the NSC, or rather the investment climate in Kenya from an investor's perspective. Samchi Group, we are hosting Madam Esther Mushemi. She is the Chief Executive Officer for Samchi Group. She'll be giving us an overview of what her business entails, the diversified portfolio that she runs, and most importantly, 18 years. Who survives for 18 years? Anytime you hear about SMEs, they contribute 76% to the economy, but it's very hard to find most of them that have actually done 6 years and above. The number becomes to be very, very, very leaner as you get over and above the years. Let's take an investor perspective, understand what does it mean to put a shilling in what industry, why would you choose this industry over another industry, and really what have you learned from an investor perspective. We take a short break and show you the prices for the daily commodities. And as always, we are streaming live on our Facebook page and on our YouTube page, and that is the Metropole TV channel. As always, go call a friend, take a quick cup of coffee, come back and join us, engage with us on Twitter, and let's see what we can be able to bring out in the second half of this session. See you shortly.